welcome. South Factory Wednesdays. Brought to you by Thanks Neo. Powered by Thank You Come Again. All right, let's get cracking. Today, we going over the Fibonacci sequence. Right? Using fibs, mastering fibs, understanding fibs, using fibs in setups, trades, and so forth. All right. So currently on the block we have today is crude oil. Now, we've been going over this setup all week on all the floors, chopping it up, mixing, mastering it, and saying, hey, we good. So we're going to run it back. And from there, we're just going to bust it down. So without further ado, let's crack at it. So what we're going to do is identify significant key levels, right? And I'm going to show you how the magic of fibs love to work. So we're going to say, hey, these some key levels here. They want to pay attention to. Boom. Then we're going to say, hey, what's happening? What is the deal? How do you pay attention to this? And so forth. Okay, cool. So, CL, Tuesday. Bounce, bounce, bounce. Made this low here. Right. Boom. Made the low. Retested low, found support. Break a structure, right? So now we have a breaker structure. Typically, what happens to a breaker structure on a higher time frame, guess what? You're going to get a form of retracement. So to understand how to take this setup to take advantage of the new set uptrend, because a lot of times they'll sweep liquidity, come back down, retest lows. But since the market was already overextended, right, from the previous couple of days of down price action, you can only go down so long before you actually have to come back up. So you got to understand price do need to retrace. So when that said incident happened, we're going to take this pivot point here because that's our most recent one. We're going to go up to this high here, right? So there we go. Boom. Okay. Now, I like to use percentages. I know some people use the numbers, but I like to use the percent so I can discount it because I like to think of Fibonacci as grocery shopping, right? When you go to the store and you want to say, hey, what's on sale? Well, how much is it really on sale by, right? Well, I like 60% off, 50% or greater. So anytime I'm looking to take a trade, I'm looking at a trade to be 50% or greater. That's a good discount for me to take action, right? So on a 1 hour chart, price broke structure, went up, swept liquidity, bump, 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 came down. Made an 88% retracement from this said pivot point from the high to the low. The high point, right back down 80% towards the low. From there, they picked themselves up and took off running. Now, you may be seeing some additional numbers on my chart, these negative 27 numbers. I use these as targets. So real quick, so we can be on a level playing field. These are my Fibonacci numbers that I use, right? These are my extension numbers. I have numbers on the bottom side too that's actually serve a purpose. And then I had the ones on the top side. So these are all my numbers. And I have mine set to percentages. But yeah, let me get that right back up there. So if y'all want to screenshot that, y'all can. Bling, bling. Or when you go back and watch the video, there you go, just pause it. Get that love, right? All right, cool. So that's that. Now, mind you, when price drop down, that's where you want to be start looking at, right? You want to start looking, right? You want to start getting to the 50%, right? What did they do here? See, this actually made a support. They broke structure. We're going to drop down to a 12-minute chart real quick, right? From there, we're going to change these fibs. I want to change the look of them. Let's go wave 2. Stand that out. I want to make them less noticeable, right? So I got multiple ways for a reason. So this was our low. Technically, it was our lowest point here. So from there, we had a quick internal break of structure. You had multiple here, so that's why you got those little pops. You're like, okay, this was a base. Boom, we broke, right? Where does the last base come from? Pivot up. They broke that. So this is the most significant one here because price bounced from this level. Okay, after they made a 50%, almost 61% retracement, price bounce. Gave us a break of structure. Cool internal. Price came down. To your left, what do you have? So this is the important part of understanding your OBs, right? There you go. You can actually take it up to here because of the two candlestick. Anytime you get a strong push, a complete 180 candle come in, take that price out. How you know it was an order block by looking at this candle here. This candle came back into that said zone test. Well, first test one, rejection. So once you get price come out, boom, reject, price goes back up again, boom, retest is out, right? Out to the moon. So this was test one. Could confirm that hey, buyer sitting here. Yes, you get some price action here, right? Boom, price come back down. So this is test two, back into this said level to say yes, we back in it again. But this time they are not going to give you that much love. So they're going to drag price down a little bit deeper, drag you into the mud a little bit because you say, hey, what most traders do? They like the rinse and repeat method, right? Well, guess what you're going to do with that? You're going to say, man, it's an OB. I got it. Boom, stop loss here. All right, cool. I'm going to go here, my stop loss there, right? Take profit to the last swing high. You're going to say, well, I'm going to go to sweep the liquidity. Technically, you want to go there, but, you're going to say, hey, it was smooth, right? So you're going to say, all right, I'm going to go there. Cool. They're going to look at it. 49 ticks profit, 41 tick stop, right? So you're going to say, how can I risk less? So next time, you're going to say, well, they do it again. I can risk 15 ticks or I'm going to say 20 ticks. Okay. You're going to clone that model. They come back there because somebody seen it and they was targeted to the party. So they're going to say, man, they ain't picked my order up. So I'm going to do it again. SOS. What they do? They just went slightly past your stop loss, stopped you out, and went on about their business. They had to grab some friends. You just happen to be a casualty of war, right? Instead of you simply taking more risk because there was more cheese on that table to grab than anything and using your negative 27, right? Which you'll see here. That is here's my supersuit. Yeah, let's pull that back. All right. So negative 27 always TP1. Then you also have a TP2 of negative 61. But I like the negative 27 is very conservative, take profit, right? So you can always do that or the zero level. So now the trade makes sense to put your stop loss at the low. If they violate the low, that means that's a break of structure, which means the market is going down, right? But we want to have it below that. Make sure you keep a moderate risk on. Now, if you say, hey, that's too much risk for me, well, guess what? You can actually lower your entry if you know they stopped this low last time at the 78. So lower your entry a little bit more down, closer to the 78, and say, well, that trade is more worthwhile. Or I need to drop down to the micros, put on a smaller position where I can afford to set stop loss, right? And then you attack it from there. So once price draw in, boom, 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 risk management, limit order set, trade on, click, click, you out of there, right? It's gone. So looking at it, boom, it hit your take profit. Great. All fibs, right? All fibs looking at market retracements. Now, let's say you wasn't sure how far it can really run. Well, guess what? They also got fib extensions, but we're going to clean this chart up real quick. With all this fancy price action, we know what can happen. So we're going to grab where are you? Right here. Cool. Fib extension tool. So we're going to start at the base, go to the swing high, go to the pivot low. 3-point play. Now, you don't have to necessarily use 3 points with this. You can actually use less than that. You can go on one candle, whatever you want to do. You can get two candles and you can really get, for a while with this, right? So you got your 61% extension all the way up to your 127, 616, 200, 227, 241, and so on, right? So I got extension levels all the way up. Now, let's say, what's the 300? Well, we can always put lines there, right? And say, where this field going to land at? Go to the left. What do we have here at 300% retracement? We have a fair value gap. We have a roll of fair value gaps, right? Do, do, do. So now I have clear targets on why price is going here. So currently we at the 141 fib right now, and that is Tuesday, the 6th, June 24. So as of today of this video, we are currently at the 141 fib extension, right? Now you're gonna ask yourself, what's over here? So you can always put a horizontal line and look to your left. You have a 2 candlestick order block. You know, from there you go. Price go up. Boom, boom, boom. Right? Okay, 1 second here. All right, there we go. All right. So once you have that 2 candlestick, that's a form of rejection, right? Trade. What a boom. It's fine. All right. So yeah, that's a form of rejection. You got another proper rejection here. Somewhere it can reject here, or have all these reasons to reject here. Now with these roller set candles falling down, we're gonna back out to the 1 hour chart and want to ask ourselves which one is the important candle, because not all of these gonna be important here. Boom, boom, boom. There we go. All right, cool. So what I want to do is I'm gonna draw a line because this is the point of displacement, right? Boom, boom. Okay, one of these off. Let me a little straightening because I like to have straight lines. Boop, boop. All right, we off by 2 cents. All right, cool. Everything's smooth, right? Good deal. So inside of this candle was a displacement candle. So this was the disrespectful candle because they did not respect market structure. So guess what? This is, I said, target, right? So somewhere inside of this candle, they got a target on it. They say they want it, right? So we're going to drop back down to that 12-minute chart now. Now we're going to zoom back over there. And we're going to say, this was the problematic candle. This son of a gun here, right? So this is a target. Well, also, you look up top, right? You have liquidity sitting here too as well. Buy side liquidity. You got buy side liquidity sitting there. You have a displaced price with a fair value gap. Good deal. That's also on the table. They're gonna want to come back for that, right? It's a target. Now, in saying so, well, how would I actually play that? I could go short, right? But now my risk got to be way up here past liquidity, or I got to be up here, up here. So I simply say, hey, price is going up there. I can ride price up into it quits and say, hey, we are done, or until it's no longer showing me power of a uptrend, or I can wait till we get there. Well, it's a lot of space and opportunity from this said mark here to 300% field there. That's a pull $1.78 move, right? So that's a lot of ticks on the board to simply not pay attention to that. So you're gonna play it smart, sit back, relax, and let price do what it need to do. Got it? So from that note, we're gonna go ahead and clean that off, and we're gonna move over to the next chart. And that's gonna be Gold. Ba-da-da-ba-ba. All right. Any questions on Fib so far? That's smooth. Okay, cool. All right, gotcha. Ba-do-do-do. So we had a lot of stuff here. Oh, that's one of my alerts. I'm clean that up real quick because I'm gonna get away. I wish they was invisible like last time they used to be. All right. So you'll say what caused the uptrend, right? We've been trading gold all week long. So we've been paying attention to it. See, it's an SOS system. You get a break of structure. Okay, great. Price go down, price come back up. Now, what's gonna set the difference was once again, price is in a downtrend, right? So when you got your break of structure, you go to your pivot high to your low, where price starting to pivot from pivot low, right? Oh, look what happened. Price came up to the 61%, retraced. Now, the key was price did not drop past this level again. That's where you're going to be looking for price to go down to continue your said downtrend to sweep lower lows, right? To take out this low. But it did not do that. So instead of going for that lower low, this thing made a higher low, pushed off because it started making market structure shifts, right? So instead of price breaking down and going down, the 61% was resistance. Now it's not holding no weight whatsoever, right? They blew past that, went to the 100% mark. Boom. What did they do? My feedback. Boom. Sweep buy side liquidity. Well, guess what? Now we have a different set of stories, right? Now, from this point, from here to here, we have a market shift, market structure shift, right? So that's MSS because it's messy. All right. So since we had that little top, you see that? Well, price going up. Okay, cool. Price failed to make a low. That's a shift in market structure, right? Then from there, as you watch, price did this number. Boom, boom, boom. Sweeping highs. Okay, now we definitely know we have confirmation that hey, price is going up. But right here was a telltale sign. Once we seen a higher high right here versus that lower low, so now we building up structure, and then from there you seen price dip right here, right? And then failed to kind of consolidate. So what they was doing was consolidating at the end of the day, going into the Asian, right? That's why I tell you, SOS is always the same thing. This is our low point here. What they do, a quick break of structure, BOS with the liquidity sweep, and they go off the handles. That's when they go parabolic, right? All they did, accumulation, manipulation to the upside. You right, Clyde. Now, once they swept buy side liquidity, now this level taken out, boom. Now, what did they do? They reverse. Run your fibs. What we got here, right? 78%. Boom. These are the thing about the other fibs, so you got to count. All right, let's swing this over. When it's coming down here, these other fields are also supporting resistance. They are calculated support and resistance. Always keep that in mind. So as they bounce around, this is your support and resistance, right? But after a while, it's still having that support. Price coming up, breaking out, breaking out. And like I told you, if you would have used negative 27, negative 61, those are key targets, right? What price do? Straight to those key levels. Off. Gone. That quick. No huss, no fuss. We lit. Right? But that's what it does on a regular, consistent basis. They'll find support. Boom. They'll take out levels, build market structure. Quick liquidity sweeps here. Liquidity sweep because they came back down, found support. Boom, 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 boom. Went on about their business. Rebalance price. That simple, that quick in the story. Right? Now, another one I was looking at was Amazon. I was talking about at the beginning of the week. I
Hey
went wrong.
Neil,
Yes, sir.
hey, got a question. On your like how do you use the field levels on the 23, 38, and like the 78 and 88? Like do you just mainly whenever you're looking for a trade, you just waiting to that 50, are you mainly looking at the 50 and 61% zones
No,
before?
so what it is when you get let's go back to gold real quick, right? When I'm looking at the 23 to 38, let me actually switch this to my other everyday Fips. It's more transparent, right? You should be able to see this better. So anytime it's coming here to a 23.38, right? That is not a strong enough resistance. So when I'm looking at those, when price get to the 23 and reject or the 38 and reject, I know for sure they trying to hurry up and run price down. That is not a strong enough rejection to make it long term. So typically when it bounce off those levels instead of making a deeper retracement to a 50%, I know that trend is not gonna last long before a shift happens. You get what I'm saying?
Yeah.
So in one case, let's go back to crude oil, right? I seen this what happened like Monday. I like to see a 50%, 60% style retracement. In this case, typically you'll get those shadow retracement during the Asian markets, right? When they weak like that. So where is it? Oh yeah, here. I think it's here or somewhere up in here prior to New York, right? So you'll see it broke down. Boom. You see that's more sustainable, right? Now, where is that mark? It happened somewhere over here. Definitely NQ do it. So you be like, okay, cool. They bounced again. There we go. So technically they swept highs there and then they start running, right? So on a lower time frame, let me go rewind. I want to cut this price off because I remember it. I just gotta find you an example. 3 minute chart. Okay, cool. Right. They broke the low. There we go. Right there. So you can have price saying, hey, they bounce here, right? So when they bounce here, that's like, all right, this is resistance, but they also had a why. They had a lot of different, candlesticks patterns saying, hey, we can reject here. But me, I'm typically seeing when it comes here, they be already over exhausted and they're gonna want to make a stiffer move to the upside, right? So as you see, the MACD and everything is weak, very weak, weak. They trying to look like they trying to pick it up, right? As they was getting to this point here. Let's add another couple of candles. But they decide to actually drive crude oil down more. But typically, this is like, all right, we want to hurry and push it. If they pull it up here, they're giving buyers time to like buy it back up to a fair price before they drop it down. That's always like the 50%, the 61%, because I know those retracements are more sustainable. You can see a 38% retracement. 23 is cool, but I prefer the deeper retracements. I feel like those trades are safer on higher time frames. You may not always get the 50% retracement. You can see it rejecting, but if something rejecting at a key level, it's still resistance, right? Or it's support. At the end of the day, that's what all this is about, is support and resistance. Is that making sense, Lee?
Yeah, this is making sense.
Yeah. So long as it's holding support and resistance, you can be like, okay, cool. That's support. All right, this is resistance. So when I look at these other levels, I'm like, that's support, that's resistance. Now, if we get up to a 78, I'm not abandoning my thesis. I'm just gonna watch it. And I'm gonna say, that was a strong push up. Let me watch it a little bit longer. Don't pull a trigger right away. Or if it get to the 23, I'm be more hesitant because I know typically they like to go up in this zone. That's why they call it the golden zone. They like to go up here at the 61%. 9 out of 10. So when they do stuff like this, is kind of weird to me. I like to wait because it's better to be safe than sorry. And so sometimes you miss the trade, sometimes you don't. But that's one of those things where you got to be okay with missing trades. You don't have to say, I got to get every one of these. It may not be the best opportunity for me to take that said position.
Okay. Okay.
My blue list. Where that thing go? Amazon. Okay, where was Amazon at? Oh yeah, on the daily. Get rid of this stuff. So with Amazon, these boys playing right. So what I was actually looking at off the weekly chart, I was like, hey, Amazon down. Monday, I was looking for a 50% retracement. Look, then I like to go drop down. When I go on the stocks, though, I like to be on the 1 hour because you got all day. I like that 1 hour chart. That 1 hour, 12-minute chart, I'm good there all day long. Lower time frames, get janky. Now, when you're looking at this said pivot point, look what they did. They came up to the 65%, but when they got here, they stuttled out. Monday, you see what I mean? This is what happened Monday at the bell. They jumped up in here. 3 candlestick was a weak order block. Right here. All right. That they keyed off of. But this that 38%. You see it? 38% retracement. That's what they made. Almost a 50. Then they started rejecting. Found support at the 23. So now the support is out. The 23% fib is acting as support. It didn't held no resistance for it, but now it's holding support. And look what they did. They went up higher, right? So that's why I say you can, take a quick scalp here. We go down to a 12-minute. You can play that game here, right? But overall, it can get dangerous because they still wanted to discount price more. It wasn't enough. That's why I said, yeah, this the trade for sure. Because I also took this one on Monday, right? I scalped it down the moment they stopped playing around. I wanted to swing trade it, close it by Friday or Thursday, but it didn't allow for that. They hit my break even point, and I'm like, okay, I'm out of here, right? But this one, I mean, 38, they started rejecting down. I'm saying, oh, okay, that's a reason. Let me go ahead and get up out of here. Let me just take that down and see if they're going to sweep the low. That's why I have my limit orders, well, my alarm set here. So just like you be busy, this is how I do mine, Lee. I set my orders, I set the alarms like here and here. So as they break in certain key levels, I'm like, okay, great. They're letting me know what time it is. The only time I have something above to I have below, above and below. That way, as they going off, I know to go pay attention to that said trade. If not, you see a sideways price action. Then once I get green, stop loss and profit. And you can just pretty much sit back and just kick your feet up. Yeah. All right.
So so you're you're on the 1 hour and the 12 minute. Whenever you're trading stocks.
Yeah, because I want the most data as possible. I'm not looking for a sharp move, right? So even if I'm on a 1 hour, I'm still somewhat day trading per se because that move can be breaking down on a 1 hour, but if it's not showing on the 4 hour, it really ain't gonna hold that much weight. So I'm using a 1 hour and a 12-minute, or you can use a 15-minute, whatever to your liking, or whichever chart that you understand best. You understand a 15-minute chart better than 12, use it by all means, right? But a rejection and market structure on 12-minute and 1 hour is way stronger than any other lower time frame. In the lower time frames, that mean I got to be in my trade way well, kind of like in and out faster. I got to be in there way less time, and that move can be smaller. So that means I have to use different type strategies. I got to go closer to the money. Then from there, I got to put less time close to the money, right? So that way, when it makes that move, now I got to play with the Greeks and it got to push. But if I'm looking at a 1 hour, 12-minute, that means the move I'm looking at gonna be a couple of points. It's gonna be 1, 2, 3 point moves. Then I can buy 30, 40 days out and kind of let it play. So it'll still be in my favor. Then I'll have to risk sometimes I don't have to risk that much capital to play that move.
Okay. Okay. Yeah, I'm gonna start looking at that a little bit more.
Yeah, I'm telling you, after watching the futures chart, right, you'll see this market is not fast. It's actually very slow. So you can legit take your time and you can watch, pick your entries, pick your spots, snipe them, and get in, get out like all day long, right? So straight up and down, here's the crazy part: the same stuff I was showing you in the futures market. So let's scrap this other fib. All right, so this is a break right here. Boom, market break structure, right? Break a structure, cool. Price go down. All right, this my high, this my low. Price did what? Retrace back up to your golden zone, right? Like things can kind of look cluttered. So let's go to a 3. See how price came back to the golden zone? Breaker structure, down to fill the gap. Boom. Price bounced around, came back where? 61, 65% retracement, dumped back to the zero level, but it found support. You see what I mean? It's the same stuff I showed you on the futures market. It works on all these
Yeah.
charts. This stuff works on every single chart. I promise you, as you can see for yourself. But
Yeah.
you pay
I see
attention
it.
to that. Now, the key difference was, right? You see it didn't break your low. So you didn't get a break of structure here, right? You know, so from there we get what? A bounce. So instead of it's doing boom, 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 going to negative 27, it said no, right? We got a bounce to the upside. And then from there, it did that little down move and continued on about his business, right? Yeah, getting out of control. Lost control. Whoop, whoop. See the difference? So when that happens, when things go bad, don't go with them, right? So when you see Price did it last time, but it ain't doing it this time, they just gave you a second chance to scalp it down. And you got to ask yourself, like, well, from this retracement to here, that was 48 minutes. That was a $1.72 move on a 12-minute chart. So you had a 48-minute trade made a 1 point move, like almost a 2 point move, right? Boom. That's great money in the option market. A 1 point move is great money. And you can get the heck out of Dodge. You're not being greedy. Now, if you're saying, hey, I'm turning this day trade into a swing trade, now you got to ask yourself what's going on. But this goes into the factor of this when we're using our oscillators, right? Looking at the RSI, is right at the 50% level. Well, Tony went over the RSI most recently, right? But people can chart out they oscillators, right? Over the 40 is in bullish territory, right? 50% is the break even level. You see where they bounced at? It found support. Once it found support and it started flirting with that zero, that 50% halfway mark, guess what? It went up. Now, looking at the MACD, boom. What happened? It came to the zero level. So all it was doing was resetting. Okay. Reset at neutral. I think I need to highlight that some more. Go over the style. Boom. I'll make that a little bit thicker. All right. So you see it came down to zero level, then bounce. So that also another telltale sign of saying, hey, I'm gonna trade you until my oscillators get back to neutral. See if they break. I would like for them to break this zone and continue getting into the bearish territory. That's how I know I can hold this trade. But if they do not get in the bearish territory, that means things about to go bad. I'm not going with them. So from this point, right, we're gonna put a vertical line here. Now we're gonna drop down to a 3-minute chart real quick. and want to go back and peep game. Okay, boom, boom. Okay. All right. So when they made that bounce here, right? Look at what your oscillators did. Sweep, boom. This is where things got bad on the 12-minute chart. Right here. Watching the bearish divergence form on your MACD. I gave you, you should still have the numbers from that one, right? But yeah, watching your bearish divergence form. Boop, boop. Okay, great. From there, looking at your RSI, coming back up, making a sharp turn straight up. So that's telling you momentum is changing. It is going upwards. That lets you know things about to get ugly. Now you can drop down to a lower time frame to see the breakdown of your chart. Once you get back to a key support level, it is okay to go down and say, okay, what's happening? Are you going to make a big enough difference on my higher time frame for me to get shooking or to get, shaken out of my position? And I need to exit. So that's another key factor you want to always keep in mind when you're coming back down to a level support. Check your oscillator, see if momentum's still on your side. If momentum is not on your side, then you might want to ride. Now, reason why it was easy for this to come back up, because remember on a higher time frame, the market was in bullish territory. So let's go back to up to the 1 hour real quick and go see what happened. Oh, we should be over here. Look at it. The whole entire time, the MACD on the 1 hour was trying to come up for air. They were trying to get back to the zero level so they can say, hey, we ain't done retracing. We still coming up. So when you didn't have this turning over, trying to trying to croak over in this dump, you should have that should have kind of, alarmed you there, right? So you don't want to fall asleep at the wheel if this is still doing this. Now, if it was doing this over here, right? Let me grab this one. If the market was doing this, then you had all day to enjoy that downtrend. But if it's currently pulling back and that's all it was a retracement on the lower time frames to set it to let it go up, then you might want to be concerned. But yeah. And on that, people, do we have any last minute questions? Yay, nay, maybe say.
Hey, Neil,
Peace and
can you
blessings.
repeat the last statement that you made about the lower time frame and the retracement?
All right. So on the lower time frames, if the oscillators are in your favor, you're totally fine. Then that'll be, just market pullbacks, right? But in this case, since the oscillator was going into the bullish direction on a 1 hour, on a lower time frames, it may look like, hey, we are, bearish or bullish, right? As you see here. At this moment, it was coming up, right? So when it came here, this was a retracement to make that higher low. That's all it was for a 1 hour chart. That makes sense. Let me clear it up. Let me clean the chart. So looking at market structure, when price came from these lows, so this year accumulation, boom, it dumped up, boom, boom, boom. And it kept running, right? Now, if we back out to a 1 hour chart, what happened here? See how this came straight up? This was a low. So all that price, them little up and downs, turned out just to be this and a this. Let's make this
Got it.
solid. So that's what I
Reminds me of
mean.
an Elliott wave.
Yeah, exactly. So when you're looking at it, right, this what get a lot of people. This reason why I say you gotta back out. The oscillator was trying to go up. They were trying to pull up the whole entire time, but on that lower time frame, it looked like, yo, you having a ride of your life going up and down, up and down. But in reality, it's building market structure to get up off the ground until it gets to its destination. Hey, you got to understand when you need to enter and exit at certain key levels. That's why it's very important to pick and choose your entries, not just jump into a position just because you think it's going to do this, you think it's going to do that. Good. All right. And on that note, I